One of the greatest benefits of being a business owner is that you get to pay for business expenses with pre-tax dollars. Another way to put this is you get to take expenses you incur and deduct them from your taxable income. If positioned correctly, this can even extend to things like travel, gifts, meals, and pre-2018 entertainment. And that's pretty awesome because it's going to keep more cash in your pocket. I'm Gabriel Velez, partner at Tehrani Velez, LLP. We're a tax and accounting firm based out of Irvine, California, working primarily with small businesses and real estate investors. Today, in this three-part video, I'm going to be talking about some misunderstood and underutilized tax deductions, namely traveling expenses, business gifts, meals, and pre-2018 entertainment. As with any business-related expense, the expense must meet the ordinary and necessary standard to be considered a tax deduction. Furthermore, because of the inherent nature of things like travel, gifts, meals, and entertainment, people spend that money on stuff even when it's not about their business. We have stricter substantiation requirements than other expenses, and depending on the expense, we can also sometimes face limitations. That being said, those hurdles are well worth overcoming when you think of the substantial tax benefits that will result on your bottom line. Also, worth noting is that business-related expenses don't extend to employees. So if you have employees paying for things for your business out of their pocket, a properly created and implemented employee reimbursement plan is essential for your business and your employees. So what exactly is meant by ordinary and necessary? You'll hear the term ordinary and necessary often when talking about what's tax deductible for your business, because as stated earlier, business-related expenses must be considered ordinary and necessary in order to qualify as a business deduction. This is true of any business expense. So let's break this down. An ordinary expense is something that is common and accepted in the taxpayer's trade or business, and that encompasses what other businesses in the industry might also be doing. It's important to note that ordinary doesn't mean habitual, but rather just means ordinary given the circumstances. For instance, you as a business owner might only have to pay legal fees to protect your patent once in your business's lifetime. That doesn't disqualify it from being considered an ordinary business expense. A necessary expense is something that is helpful and appropriate for the business and not necessarily something that is obligatory. A third criteria that often comes up is reasonableness. Something is not considered reasonable when it is lavish or extravagant. An example from the pre-2018 days when you were allowed to deduct entertainment would be paying for a luxury box at a sporting event rather than just getting regular seats. Another thing that might also be considered unreasonable might be buying your client a Rolex watch, giving it to them as a gift. When something is ordinary and necessary but unreasonably expensive, taxpayers might be limited in what they can deduct, or they might not be allowed a deduction altogether. Due to the inherently personal nature of things like travel, meals, gifts, and entertainment, limitations are placed on their deductibility. Sometimes limitations are a percentage of the total expense, sometimes they're a dollar amount, and sometimes the subjective reasonableness criteria might also limit their deductibility. Travel expenses, for instance, when incurred while individuals are away from their tax home in the pursuit of a trade or business, are usually fully deductible, provided that they are not lavish or extravagant. Most business meals, on the other hand, are generally only 50% deductible, though there are exceptions where they might be 100% deductible that we'll discuss in part 3. Entertainment expenses incurred after 2017 are limited in that they are generally not deductible unless they meet an exception. Prior to that, an entertainment expense would be treated much like meals, 50% deductible if ordinary, necessary, and associated with one's trade or business. One more limitation is that you're only allowed a $25 deduction for gifts given directly or indirectly to a person in a given year. I'm referring to casual gifts to business associates. This would include things like gift baskets, gifts, cards, a bottle of wine, etc. And it doesn't include donations or contributions to a qualified nonprofit or a political campaign, both of which have their own set of rules. In practice, the limitations are reported as an adjustment on the tax return. That means when you're doing your accounting, you're still wanting the full figures listed on your income statement. From time to time, there are situations where your employee might pay for expenses related to your business. Common expenses are travel, gas, business meals, and so on. If those expenses are attributable or beneficial to your business, you may have a legal obligation to reimburse said employee, plus it's the right thing to do. There are two ways to reimburse your employee. Number one is an accountable plan, and number two is a non-accountable plan. An accountable plan is one where your employee turns in periodic expense reports, allowing you to account for the money they spent as things like office expense, automobile fuel, travel expense, etc. Because of this accountability, you're able to exclude the amount paid from the employee's gross income. A non-accountable plan is more of an allowance provided to an employee that are earmarked for their business expenses. Because the employee doesn't have a record of the money that's actually being spent, reimbursements under a non-accountable plan are tacked on to the employee's gross income. Hey everybody, thank you so much for watching our video. If your business is in the greater Orange County or Los Angeles areas, and you're looking for a tax and accounting firm that truly understands small to medium-sized businesses, please give our office a call. Otherwise, if you just like our content, please like, share, subscribe, or comment. Thanks again, and have a profitable day.